Hello and welcome back to Trading Thoughts, your home for everything business economics and financial markets, coming to you live here from the pod on Belfield FM. Once again, I am joined by the Trading Thoughts investment team's very own Mr. Paddy O'Grady. How are you doing, Paddy?
You know what, Pearse? I'm absolutely buzzing for the show we have today. It's the last episode of season 1, and what a journey it's been working with you and the rest of the lads. But I think today, we're really going to have a big send-off for the series.
Yeah, you think we've saved the best till last, Paddy?
Listen, this was the ace up our sleeve, wasn't it?
It certainly was. This is the big one. So today we're going to be joined by the notorious Nick Leeson, the rogue trader who famously brought down Barings Bank, once the oldest merchant bank in England. He's now part of a new venture called bizintra, aiming to help educate future market wizards in learning the ropes of trading.
Well, I just can't wait to hear, what Nick has to say about his story and to hear what he's doing now and, the journey he's been on. Let's get the show on the road, shall we?
Yeah, let's get the show on the road and get Nick on the show. Hi, do we have Nick Leeson on the line?
Hi, how are you doing?
Very good. How are you today, Nick?
Yeah, not too bad.
So we touched a bit on Nick's story at the start of the show, but we're going to be getting down to that a little bit in a moment. But first, Nick, I have to say congratulations are in order. I understand you're a big Manchester City fan.
Yeah, I am. Yeah, it's been a good year.
Yeah, it's certainly been a good year. And as a Man United fan myself, I have to, begrudgingly offer you my congratulations. Manchester is blue for the season.
Again.
Rub it in there, Nick.
Yeah. No holds barred today, it seems. Okay, so we're going to be just going through Nick's story now about his time at Barings Bank, his infamous story, we must say, and then we're going to be getting on to bizintra, his new venture here he has, operating here straight out of Galway and out of Dublin. But so Nick, I suppose, yeah, one of the most kind of notorious stories in all of finance and financial history. But before we get down to the nitty gritty of it, why don't you tell us, how did you get started as a trader at Barings?
Well, I left school at the age of 18. I didn't go to university at that time. It was the Big Bang era in the City of London, so there was lots of opportunity. I suppose there were lots of big banks coming to set up in London, and not really that much of a or not many staff that they could recruit. So there was a lot of opportunity, as I say, and meant that maybe the city, which had been barred, I suppose, to people who came from my side of the street. I grew up on a council estate in Watford. I did reasonably well at school, but the city really wasn't usually one of those places where you would end up working. But with this, with the opening up and the deregulation, there was a need for a lot more people to go and work in the city. I got offered a job with Coutts and Company, which was the Queen's Bank. So I started to work for those when I was 18. Worked for Morgan Stanley for a period of time, and then was headhunted to Barings, where I suppose the majority of the trading really started. And I travelled the world with Barings, worked in Japan, Singapore, and a couple of other locations before the collapse of the bank in 1995.
So as we understand it, you were working in Singapore on the Cimex floor, and you were working in conjunction with some of your Japanese colleagues as well. What was the kind of trading strategy that you were working on there at the time?
Well, it was a majority. There were a couple of different things, I suppose. I mean, the main trading desk was in Japan, so there would have been one of the girls would have been an option market maker. So she would have been making markets on Japanese options throughout the course of the day and running a proprietary book on that basis. We would have had an arbitrage desk who would have been looking at the Nikkei 225 and buying the component stocks and hedging that with futures and possibly a few options from time to time. So it would have been a largely hedged position, but looking to benefit from those, the small price fluctuations that existed at the time, but buying a percentage of the Nikkei 225 en masse in one transaction. We would have had a couple of guys who would have just traded a futures position, looking to to benefit from the changing gamma that occurred during the course of the day. So it would have been quite, there would have been quite a broad, but there were there would have been a number of broad trading strategies. The one involving Singapore would have been largely an arbitrage between where the lead market was, which was the Osaka Stock Exchange, and where the secondary market was trading in Singapore. It was the same product. It was half the contract in Singapore was half the size of the Japanese product, but the Japanese market would obviously have been the lead.
Okay, so you had a lot of different trading strategies going on at that time in Singapore, but then the problem started out with the 5/8 account. What exactly was that, and how did it come about?
I mean, you're going back to a period of time where there was a lot of open outcry markets. Singapore was or Cymex was an open outcry market. So you were stood in a pit, and everybody was trying to trade using hand signals and raising their voice and jumping around a little bit. So there were often discrepancies where your eye line might have been on one particular individual, but the person behind him thought that you traded with them. So there were always mismatches, and there was a need to reconcile those during the course of the day and as quickly as possible. So typically that would, if you go to the more developed markets or the more professional markets, that would have occurred within a 30-minute period. So if you're on Life, or if you're on one of the New York or Chicago exchanges, there would have been an obligation on you to match that trade within a 30-minute period. In Singapore, what happened was it was a period when the Japanese markets were falling quite dramatically. So what was happening in Japan was that there were circuit breakers that were kicking into the markets in Osaka and in Tokyo, which meant that if there was a movement, either a quick movement and significantly more sellers than buyers, or there was a 700-point drop in the market, which there were a lot of at that time, the market just wouldn't open. So all of the investors and funds and brokers and banks that would have existed would have then shifted their business to Singapore in order to either take a position or to hedge out a current position. So what really happened was that the Singapore International Monetary Exchange was really a very small boutique type of exchange that didn't do a great deal of volume. So with the circuit breakers coming in Japan, that went from trading 2,000 contracts a day to trading 20, 30, even 40,000 contracts a day. So the systems weren't able to cope. There's a lot of orders coming in, a lot of mismatching, and it was taking 14 hours to match a trade, whereas it would normally take half an hour to do that. So there were a lot of discrepancies. On one of those occasions, we realized that there was a position, or I realized that there was a position discrepancy, and that error made itself or found its route into the 5/8 account, which was depending on definition, it was an error account, but it was an error account that was hidden to the rest of the bank.
Okay, so in the days before, e-trading and, say the likes of us just, clicking a few buttons to put in the trades, I mean, it was more complicated, and that led to mistakes then that had to be rectified or whatever.
Yeah, I don't think necessarily it was more complicated. It was certainly more manual.
Yeah.
So, like when I lived and worked in Indonesia for a period of time, and then when I lived in Indonesia, share certificates would have been bearer certificates. So if you were walking down the street and you picked one up and it was signed correctly, it was yours. It was as good as currency at that particular time. So when I lived in Jakarta and was working for Barings there, we had a backlog of shares that needed to be paid for, and we were, we'd have to go from broker to broker to get them signed correctly, and we'd carry them around in, those sort of legal attaché cases, and they'd be handcuffed to our arms because, if people came across them, they were bearer certificates. And anybody could have used them and sold that particular equity. Exactly the same in the futures market. Rather than clicking a button, I would, by hand signal, tell one of my traders what I wanted them to do, whether it was to buy and sell at what price. They would then, in a small circular pit with maybe 250 people in it, they would then communicate that by voice and by hand into the market. And somebody would either say sold or buy if you were offering, and then you would write a small a trading ticket, give that to your clerk, who would then go and input it into a system. The other person would do the same, but obviously the opposite side of the trade. And then within that 30-minute process, there should be a matching of those two tickets. If there wasn't, then you had to resolve it. And that was the manual, that was manually where the errors started to, or where errors could occur. If we couldn't reach an agreement, then eventually we would go to the exchange and look to view the tapes, and then one of us would have to back down, either me or the counterpart.
Oh, right. So Nick, you touched on then that, things were kind of exploding in terms of volume in Singapore, and then this kind of 5/8 error account. But how did something, I suppose, that at the time you could say it was, an insignificant error account, I funnily named the 5/8. How did that kind of how did it get so out of hand? How big of a thing that this, obviously, it brought down Barings. How big did it get?
Well, I mean, huge is the answer. I mean, Barings was a small bank by standards then and standards now. I mean, the capital base was £250 million, so it's quite a small bank. Over a period of time and concealing those losses, I controlled 600 million worth of the bank's money in Singapore. So, I was reporting profits. So, falsely reporting profits, and the bank were believing of those. So they would continue to send margin to Singapore for me to be able to trade with, in the forlorn belief that I was going to be able to trade my way out of the situation. So the answer to your question, I suppose, is with a period of time and me not owning up to the situation, I took on more risk. That risk got more and more out of control and led to bigger losses, which eventually, over a 3-year period, culminated in £862 million worth of loss and the collapse of the bank.
Wow.
And I suppose the straw that broke the camel's back then was you were long the Nikkei index, wasn't it? And what happened there?
Well, I mean, there are two schools of thought. My own personal opinion is that the position was just too big by the beginning of 1995. So there was no way that it could be unwound. If you add that to the fact that Barings had no more money left, the combination of the two meant that there was no more margin coming out to me in Singapore, which meant that I couldn't prolong this any longer. Plus, there was an audit ongoing. That's my opinion of what the tipping point was. But some people will point to an earthquake in Kobe that occurred at the beginning of 1995. Now, Kobe meant that there was a not necessarily a collapse in the market, but the market traded down off the back of it reasonably aggressively, not overly aggressively. But there were knockout puts in the market. People were starting to become aware of my position. So volatility was increasing. People were trying to force me out of the market in many different ways. But, it was by that stage, as much as I continued in the belief that there was going to be some way to get out of this, the position was just too big. It was unmanageable, and I was never going to be able to unwind it correctly.
And then, Nick, I suppose, you could say, the chickens came home to roost, and you handed in your resignation, and then I suppose, well, in popular culture, you fled. What was going through your mind when you hop on the plane and you got out of there?
Well, you want to leave because, well, look, somebody eventually after 3 years has come to me with a very simple reconciliation of positions, and there's no explanation of the discrepancy. We only had two accounts in Singapore, a Tokyo account and a London account. You add the two together and it should compare to Cymex. Now, there was a huge discrepancy, and that discrepancy was there every single day for 3 years. But nobody had done the reconciliation until the 23rd of February 1995. And when you're confronted by something in black and white, there is no way you can explain it away. This is a reconciliation that a 4 or 5 year old kid could do. But genuinely, it is.
Yeah.
It's you had two numbers together, so you had two and three together, and if the answer is 6, you know that something's wrong. So, and that is as simple as the reconciliation was. So you can't explain that away. So obviously, everything is going to start to become exposed. And do you want to stay in Singapore, which at the time was pretty much a police state, or,
of course, yeah.
do you want to exit and try to see what you can do in order to protect yourself? So it was more self-preservation than anything else. There wasn't any forethought. Somebody presented me with that reconciliation. I went to the airport, got on the first flight I could out, which was to Kuala Lumpur. From Kuala Lumpur, I managed to get to a place called Kota Kinabalu, and then from there, eventually made my way back to Frankfurt, where I was arrested.
Wow, so it's quite a story, but I mean, a lot of us here in UCD, there is a lot of, maybe would-be traders in the future. So I kind of wanted to ask you maybe on some of your learnings and, your kind of takes. Was there an inordinate amount of pressure to succeed when you were at Barings and when you're on the trading floor?
You don't necessarily you don't necessarily experience it in that way. I mean, I think if you take a step back and you look at it, then it might be something that you see a little bit more clearly. I think a lot of the pressure that you find is your own personal pressure. Everybody wants to succeed. A trading floor is that modern day amphitheater where everybody is trying to make money. It's a zero-sum game, so not everybody is making money, and people, I think they instill their own pressure to succeed, and like it is that zero-sum game. So, and it suits some people, it doesn't suit others. Very much an alpha male type of environment at the time. But there are ways that you can offset some of that. I think it is important that you challenge people that work for you, but at the same time you have to give them some form of support. Be that a learning outcome or some sort of development skill. And you've got to complement the two. At Barings, it was just about success and trying to be successful. There was no management training courses or anything that you went on. It was all very heavily biased towards being successful.
And do you think, that trading culture between your time and now, has it changed at all? Or, there's still kind of an unhealthy culture in sales and trading?
Well, I mean, culture, conduct, behaviour are the key words that regulators around the world are using this year in 2019. So, it's a concern. You have what they now call the first line of defence, where you have people working literally on trading desks just to look at emails and listen to look at the emails that the traders are sending out, to listen to the voice recordings that are there, to look at their own personal emails. So the level of scrutiny is a lot tougher than it's ever been, and that's because banks, I suppose, after all of this time, they've tried a few things along the way. They've ignored a lot of what went on for a large period of time. They've got fined quite excessively. And now, because of the senior managers regime that was introduced in the UK, where there's more personal liability for the actions of the people that work for you, they now have, over the last 18 months, the first line of defence has become very important. So now it's always been important. There was just never people who populated that area, but banks now have an awful lot of people, or trading houses have a lot of people who work in this function, and it's purely just to scrutinise and supervise what the traders are doing. So conduct, culture and behaviour, I'm not going to say they're the same as they were 25, 30 years ago, but the potential for those two things to go wrong is exactly the same as it was 30 years ago. And it does still go wrong. I mean, you have LIBOR rate rigging, you have a few, you don't have the rogue trading scandals that you had maybe 10, 15 years ago, but there are still scandals and a lot of wrongdoing within banks.
Yeah, and I suppose you touched on, that kind of supervision of people on the trading floor. And even, in the past few years, we've seen the reforms kind of separating the front and back office. But, one thing you said in the aftermath of what happened is you were kind of critical about the executives of Barings. Do you think the modern bank executive understands the system much better today?
I think they have, there's certainly at the time of Barings, there was no real personal liability in relation to what was going on. So that's expanded out a little bit over the last few years with a number of the reporting regimes that have come in. So there've been some developments there. So I think the more senior managers, the executives, are very conscious and aware of their own personal responsibility and liability, and that's why the first line of defence has become, far more critical than it had. Well, it's always been critical, but it's not been an area that you've seen much growth in over over the last 10 years. But in the last 18 months, there's a lot of people populating those areas to ensure that the traders are supervised far more closely than they ever have been in the past. I mean, if you look at the LIBOR rate rigging scandals that went on, 5 or 6 years ago, there were a lot of, it's people using code names for different things, and there's still a bit of that goes on in banks, and they're trying to weed all that out. Personally, I think it's very difficult to change culture. It's and conduct. I think you can make very piecemeal changes to it, but it's something that unfortunately is ingrained within the banking and trading fraternity, and it gets handed from generation to generation. If you think you can get away with it, get away with something because somebody else has been for a period of time, unfortunately, there will be, and it's not everybody, but there will be an element of people within those organisations that will also try to get away with it.
Yeah, well, I suppose, I mean, when you look back over a couple of 100 years, it took a long time for boring old banking to become, the alpha male trading idea that we have in the last 30 years or so. But I suppose if we let's bring it back kind of toward today. You made your way over to Galway in our beautiful island here, and you're with a firm now, Bizintra. So just maybe just talk us through, what is bizintra and who's it for?
Well, we provide trading education. It's there's no smoke and mirrors around what we do. I would find it very easy to bring you up a chart of the way that the market's traded today and give you an entry and an exit point. Again, a 4 or 5 year old would be able to do that, but we trade in real time. We tell you, we show you where we enter the trade in real time and where we exit the trade. And it's about, there's a few reasons why bizintra got started. There's a lot of very misleading advertising that goes on out there to suggest that it's easy to make money from trading these markets. It's not. It's important that you have an education, that you empower yourself with as much information as you possibly can. So we offer a beginner's course, an advanced course, signal service, and a trading community where people can share their different views. Look, years ago, I never asked for help and advice. I wish I had. And I think bizintra and the platform, the trading community, gives people the opportunity to do that. So, it's like-minded individuals, and we try to teach people to become consistently profitable rather than looking for that one big hit out of the park, which can be really damaging because you probably only do it once in your lifetime, and you spend the rest of the time losing the money that you made.
Yeah, no, it to be honest, it kind of reminds me of almost the antithesis to those old how do you say, system tradings, where it's to follow our system, and you'll get like 100% guaranteed over the last 10 years.
And they
Yeah,
show you pictures of yachts and the Ferrari you're going to buy
that's
as well. Yeah.
that's it. That's it. We don't do any of that. It's not easy. You need to learn. The more information you have, the better. If it was easy and people were generating 50% returns a day, they'd be working for one of the banks, or one of the banks would be buying the system off them. The fact
Yeah.
the fact that they're peddling it on the internet suggests it really doesn't work. But the
Yeah.
unfortunate thing is that people get spoofed into it, and they believe it and they buy it. Some of these systems you might pay $5,000 for, and it's a complete and utter waste of money. So we don't charge anything for what we do. It's all sponsored by various brokers, but it's just about giving people the education that they need. If like everybody is lured, if you see, it's a bit like Bitcoin years ago when everybody sees the Bitcoin price going in one direction, everybody wants to buy some, and the people who own Bitcoin at the time, they're really encouraged by that because it means they've got somebody to sell to. But when the price turns around and you've got nobody to sell to, the bottom falls out of the market. So the media has a huge part to play because it influences people's opinion of certain things. And like you say, if I hire a yacht for the weekend and spend an hour on it and take a picture of myself jumping into the sea, you all believe that I own the yacht, but I'm giving it back in 50 minutes.
Yeah, yeah.
Piers, you fell for a few of those scams, did you?
No, I wouldn't say I fell for them, not yet. But so Nick, there's a great scene from the movie Rogue Trader where you're being portrayed by Ewan McGregor, and he's trying to explain the mechanics of future markets to his fledgling group of traders using a cup of coffee. So I suppose the question is, what's the cup of coffee you use with bizintra? What are your kind of teaching methods? I suppose seminars. What is it?
Well, we do everything. Everything's online, so people can. Some of it's live, so if you want to watch it live, you can. Otherwise, it's available for you on demand, so you can watch it in your own time, and you can learn at your own speed, whether you want that to be slow or you want to get to the advanced courses fairly quickly. So it's catered. It's catered for everybody. It starts from the basics and works its way through to some of the more complex analysis that there is out there. It's not too heavy. We look at options and the way that you can use some of the other instruments to hedge your exposure. But yeah, I mean, it's all online, on demand, and available when you want it. In terms of that, I remember the coffee analogy or the coffee explanation just because I see a reference to it once when somebody was showing the movie somewhere, but parts of the movie are oversimplified. It's not like financial markets aren't particularly complex if you have the education and if you have the skill set to approach them. It doesn't suit everybody, and you're as well off telling somebody that it's not really for them, if rather than encouraging them to lose money. I mean, most people are lured into these spread betting and CFD enterprises that we've spoke about. 95% of them lose all of their money very quickly.
Can I just say, Nick, you've been quite honest. You're not promising the world to everyone out there, but you're saying it's not, trading is not for everyone. Can we just ask, to hone in on that point, how can some people like me and Pearse know if we're cut out for trading? I mean, is it, we need a certain aptitude or intelligence, or is it more a personality thing? What do you think sets people apart?
It's a combination of all of those, really. You need to be quite disciplined. You need to be. I think a number of people who are quite rule based in the way that they approach things tend to do a little bit better. So if you're looking at some of the algorithms, a mathematical background has a has an advantage, but from a psychological perspective, the people who are able to remain calm longer are going to do better. I mean, markets do fluctuate. There is there is a saying that the markets will. Actually, I'm going to forget the phrase now, but they can remain irrational longer than you can remain solvent. And you've got to imagine, like anybody who's coming into this from a retail perspective with whatever amount of money that they have in their account, if JP Morgan come in with a 50 million or a $50 billion trade, it's going to move where JP Morgan want to move it, regardless of what your screen is telling you, what your analysis is telling you. And that just brings me back to days standing in a pit years ago, and JP Morgan come in with a big order. Doesn't matter what I'm bidding or what I'm offering, JP Morgan are going to go through my bid and they're going to hit the 10 bids below it, and I'm going to be taking a loss. So there are periods of time where whatever you're looking on a screen, and whatever the analysis is telling you, somebody big out there is just going to squash you. And getting used to that and just accepting that from time to time is difficult to take. Nobody likes taking a loss. And the people who can, I think, are the ones that will survive longer within trading the financial markets.
Okay, well, you've heard it here first, Pearse. Maybe time to give up on the trading dreams and leave that career path for me now exclusively.
No, certainly. I'd like to think maybe I've got the discipline. I suppose time will tell, and hopefully I can remain solvent longer than the markets can remain irrational. But I suppose, Nick, you did just mention, and I suppose I'm wary of how long we have left. But I suppose, yeah, you mentioned the kind of retail investors. It's retail investing. It's kind of gone through the roof at the moment. But do you think a lot of people start trading with too little knowledge?
Yeah, I mean, I think pretty much everybody does. The more you empower yourself, the safer you'll be. Obviously using demo accounts and stuff isn't particularly exciting, but the more that you can develop a strategy and start to, like if everybody's looking at everybody's looking at the same charts, right? You can't. I can't be looking, if I'm looking at price action on the euro dollar, it's exactly the same as what you're looking at. So it's about developing those nuances and looking for those changes in direction or changes in price action that are going to give you that little bit of advantage over somebody else, because it is a minute advantage. Unless you have like I don't do heavy directional trading. It's very much day trading. So I'm just looking to get in and out of the trade for a small return over a number of times during the course of the day. I don't really believe in breakout strategies. There's a number out there. Some people are into swing trading. There's a lot of algorithms. So it's about trying to work out or find something that works for you, and also fitting it into your day. Not too many people are going to be full-time traders every minute of every day. So if you're following a particular market and you've only got 3 or 4 hours to watch it in the evening, you want to be following a market that moves, not one that sits still.
Absolutely.
So it's just about adapting it to yourself. And I think some people do go for they believe that what a broker is telling them is the holy grail, and if they come home and they turn on the screen for 15 minutes a day, they're going to make a lot of money. I promise you they won't.
No, absolutely. And Nick, I suppose closing questions for you, but you've lived a pretty phenomenal life. I mean, your story is unparalleled with next to anyone really, I suppose. But so what does the near to medium future hold for Nick Leeson and bizintra?
Well, look, we continue doing what we're doing at the time. I think it's we get a lot of positive feedback, and I think I'm not going to sit here and tell you that we're changing people's lives, because we don't. But people do have a bit more education. They if a lot of people, I would imagine, from a retail trading perspective, they come in, try. Financial markets can be quite addictive, so you need to be aware of that, and there's no point hiding away from that. And I suppose I've been involved in financial markets for over 30 years now, so we'll continue to deliver the service and improve it as much as we can. And like I say, the idea or the ideal is to deliver more consistency and more profit over the long term. Nobody wants to see the brokers get rich, but unfortunately, that's what's happening at the time.
No, absolutely. And Nick, I suppose fantastic story. We have to thank you for your time, but there's something else we kind of have to thank you for, because to all our listeners out there in UCD, Nick and the guys at Bizintra have decided to offer any and all UCD students free broker sponsorship to their platform. So it's a fantastic gesture from the guys at Bizintra, and you can find out more information about this amazing offer at bizintra.com. Nick, it's been an absolute pleasure having you on the show.
Thank you, guys.
All right, thanks very much, Pearse. Yeah, and thanks to Nick for joining us.
Yep, take care, guys.
Take care, Nick, and go easy.
Cheers.
All right, well, Paddy, what an amazing story and what an amazing offer.
I mean, look, Pearse, when you think about it this way, at UCD we've access to Bloomberg terminals and, of course, our favourite Financial Times subscriptions, where we pull all of our stories for Trading Thoughts. At Trading Thoughts, we like to, consider ourselves a bit of a lean startup, aren't we? Yeah,
We certainly are.
The bootstrapping, trim the expenses. But
Indeed.
But no, I think, getting on board with Bizintra is the next big thing for UCD students, isn't it?
Yeah, it certainly is. And I mean, you mentioned Financial Times, all well and good. That's available to the business students in UCD. This is available to all the students in UCD.
Yeah, well, I mean, thanks to the team at Bizintra for their generosity.
Yeah, it's an amazing gesture, and we certainly are very grateful for allowing us actually to deliver it to the UCD students in a way, But I suppose, Paddy, with that comes the end of the show, but also the end of the series. Any particular highlights?
I mean, look, Pearse, I'd say the highlights were the shows I was on, but everyone has a different take on that.
I mean, certainly. I mean, Paddy, you've been part of some fantastic shows. The Stephen Malloy interview springs to mind. Investing, aircraft leasing. These are some great shows. But I mean, Paddy, you didn't always have the limelight. We had some great hosts on. Conor Hogan bringing his debut show, Money in Football. That was one of our favourites.
Yeah, that was great.
Owen Hickey, our pesky pescatarian host, and he was on for the veganism show. It was really fun. And not to mention, how could we forget Mr. Owen O'Connor Byrne, the man with all the answers, the Warren Buffett of Carlow. He had some great appearances too, didn't he?
Yeah, he did. Yeah, no, I thought, listen, it was a pleasure working with you and working with the two Owens and Connor this semester. Brilliant. Loved it.
Yeah, absolutely. And we'll say a big Paddy, I'll have to say a big thank you to you.
And I have to say a big thank you to you.
Oh, thank you very much.
Patting each other's backs here.
Very, very gracious indeed. But and I have to say thank you to all the hosts as well, and all the guys here at Belfield FM who've actually, allowed us, to do the show this season.
And listen, some of the work they've put in for us has been tremendous.
Oh, fantastic.
Really solid, and really, we're really grateful to them.
Next to none. They've been the salt of the earth, haven't they?
Oh, 100%.
And I also want to say thank you to our marketing team of Kieran Busby and our marketing director, Richard McSweeney, who's been taking care of the Instagram and Twitter accounts as well. Some of the unseen work behind the scenes.
Of course, yeah.
But with that, I suppose it's time to wrap up. Thanks again to everyone for tuning in and listening. We hope you enjoyed listening to this series and this show as much as we enjoyed producing it. Take care and go easy.